May 11, 1931, a single bank fails in Vienna, and within weeks, the financial system of an entire continent is on fire. Most people think the Great Depression started in New York. They're half right. What they miss is how a second, equally catastrophic collapse, one that spread across Europe like contagion, began not in America, but in Austria. And it started with a bank that nobody outside Vienna had ever heard of. The Kreditanstalt für Handel und Gewerbe was Austria's largest bank. Founded in 1818, it had survived revolutions, wars, and the collapse of empires. By 1931, it controlled roughly a quarter of Austria's entire banking system. In a nation struggling to rebuild after World War I, this institution was supposed to be the bedrock. It was, in fact, a house of cards. The bank's leadership had made a decision that would prove fatal. They'd invested heavily in industrial ventures that were fundamentally unsound. They'd loaned money to failing companies. They'd hidden losses from regulators. And when the global economic downturn hit after 1929, those hidden losses began to surface. By early 1931, Kreditanstalt directors knew the truth. They were insolvent. The bank had liabilities it couldn't cover. They needed a rescue. So they turned to the Austrian government and the Austrian National Bank, hoping for a quiet bailout that the public would never learn about. What happened next was a masterclass in how not to contain a financial crisis. On May 11, 1931, the Austrian government announced that Kreditanstalt needed a rescue. They tried to frame it as routine. It wasn't. The announcement was a catastrophic misstep. The moment the public heard that Austria's biggest bank was in trouble, they panicked. Why? Because if Kreditanstalt, supposedly the safest institution in the country, was failing, what about their own savings? Within days, Austrians lined up outside banks demanding their money. Runs spread like wildfire. But Austria's problem became Europe's problem. Kreditanstalt had connections throughout the continent. German banks had loaned to it. Hungarian banks held its securities. French institutions had exposure. When Kreditanstalt collapse became undeniable, those banks realized they'd taken enormous losses. Suddenly, every bank in Central Europe looked potentially dangerous. The runs spread to Germany, then Hungary, then Romania. Depositors across the continent withdrew their savings in panic. Banks that had been solvent 3 months earlier found themselves unable to meet demand. The Austrian collapse had triggered a systemic failure across an entire region. Here's what made it worse. The world's major powers couldn't agree on how to respond. Britain was preoccupied with its own financial crisis. The United States, still reeling from 1929, wasn't eager to bail out European banks. France had its own concerns. Austria was left to fend for itself. By July 1931, the Austrian National Bank had nearly exhausted its gold reserves, trying to prop up the currency and support failing banks. Foreign investors, seeing the writing on the wall, began pulling capital out of Austria. The currency collapsed. The government was forced to impose capital controls, essentially freezing people's money to prevent it from leaving the country. What happened to Kreditanstalt itself? The bank didn't disappear overnight. It was merged with another institution in a desperate attempt to save it. But the damage was already done. The institution that had once symbolized Austrian financial stability had become a symbol of systemic fragility. The broader consequences were staggering. The Austrian collapse accelerated the disintegration of Central Europe's entire financial system. Countries that depended on credit and trade found themselves isolated and broke. Unemployment spiked. Social unrest followed. Some historians argue that the Kreditanstalt collapse was the moment the Great Depression transformed from an American crisis into a truly global one. It certainly marked the point where economic catastrophe became irreversible across Europe. The question that haunted Austrian officials wasn't whether the bank should have been rescued. It was whether the announcement itself, public, uncontrolled, panic-inducing, had been necessary at all. A quiet restructuring might have contained the damage. Instead, they chose transparency, and transparency triggered apocalypse. There's an uncomfortable lesson buried in the Kreditanstalt story. The crisis wasn't caused by fraud or deliberate malice, not exactly. It was caused by something more insidious, ordinary people making ordinary decisions within a fragile system, hidden losses, unsound investments, regulatory blindness, none of it criminal, all of it catastrophic. The bank's collapse also revealed something about how interconnected the world had become. What happened in Vienna didn't stay in Vienna. In an integrated financial system, a crack in one pillar threatens the entire structure. A lesson, it seems, we're still learning. By 1933, Austria's economy was devastated. The collapse of Anstalt had been the first domino. The ones that followed were political instability, the rise of extremism, and the eventual annexation of Austria by Nazi Germany 2 years later. A bank failure became a footnote in history. The consequences defined a continent. The Anstalt collapse teaches us that financial systems are built on confidence. The moment that confidence breaks, it doesn't come back, it evaporates. And when it evaporates in one place, it spreads everywhere. That's not theory. That's Vienna, May 1931. That's history. Subscribe for the untold stories behind financial collapses that shaped nations, the ones they don't teach in economics class.